Welcome back, Elite Service members and CTKS Method students. What we see across the board, there's still extreme fear inside the main market. CPI is coming out and job openings was stronger than anticipated. One of the things you want to keep in mind is that the crypto market and the stock market are connected. Crypto is starting to turn around. A lot of the fear is starting to leave, and you can see that right there. When we look at the memes are starting to come up. That's the gateway for retail, but there's still a lot of liquidations, 600 million plus. When we look through the liquidation heat map, we can see that a lot of liquidations have already occurred to the upside. And these are on the lower time frames. When we look, there's a little bit around that 84,700 mark. What about if we go a little bit more, 84,500 and above? What about the 1 week? We're looking here at a couple of levels, 84,400, 87, 155 and slightly higher, above 90,000. Let's continue on and have a look at the 2 week. It's pretty interspersed, but you can see up there, even reaching up to the $95,000 liquidation level. 1 month, it's looking pretty good. It's at the 3 month that we start to see lower liquidation levels around the 70,000. And what are we seeing on the 6 monthly around 65? Yeah, it's looking down, but it doesn't mean that we're going to go down there. This is something that you need to keep in mind. If we get an underside retest here, we're looking around the 85,000 mark. Let's run the numbers. Crypto market is incredibly risk sensitive, so we use the watch list from the service to understand how the different rows are going. We saw the VIX drop backwards. That included a risk on sentiment inside the crypto market. And when we look down to the major market indices, they're still red. What about the futures? Still red. What about the individual stocks? We saw some uplift, especially MicroStrategy coming up 9%. What about the crypto market? It bounced as anticipated. This is why in yesterday's video I was saying basically don't panic, don't sell. Just be prepared to ride the wave of volatility. Inside row 6, some pretty good stuff happening there. Row 7, very nice. XRP nearly up 9%. Remember, the memes are the gateway. It's really good to keep your eye on it, especially Pepe. Pepe does pay out. It's very important that you watch across the different charts, and when we look at the row 1 references, they're starting to come down. The VIX has been incredibly high. This is what's been causing people's crypto portfolios to melt. We expect a bit of a pullback right here, and we expect a degree of continuation in this pullback as well. But I'm not saying that. I'm not just making it up. I'm looking at the different charts. From inside the service, I provide normalized price paths. We can see that the VIX is currently above the normalized positive price path. This is primarily to do with tariff wars. President Trump is giving everybody a tariff. He's feeling incredibly generous. But we do anticipate a pullback and a normalization back to the positive price path. This kind of reflection back, we can see it all the time. Just because you get a big surge up doesn't mean it's not coming back. And when it comes back, it causes double-digit percentage gains inside the crypto market. So please be aware of this. If you're not a crypto investor or trader, keeping your eye on the crypto market is incredibly important. All markets are intercorrelated and interconnected. When we look at the US 2-year yield, we can see it's following the negative normalized price path. It's decaying as anticipated, and it decayed last month as well. The US 10-year yield also decayed last month. It had a little bit of excess weakness into the close, but we've seen it's starting to flatline. Understanding where all of these cheat sheet charts are going is incredibly important. By going into the homepage of CTKSmethod.org, you can pick up the cheat sheet absolutely free. You just scroll down to it and you can get it here. It is invaluable. You must know how all the different rows of the cheat sheet are moving together. It's time to trade and invest with knowledge. If you understand that the VIX is currently running, it's the mafia boss of the markets at the current time. If the boss says, I'm going up, guess what? Everything is coming down. If the VIX retraces, everything will go up. It may not look like it from the headlines, but it's absolutely correct. The VIX is the mega boss of the markets at the current time, and if you're doing the cheat sheet, you already know this. Let's have a quick look how Mega Boss reacted to Bitcoin. When the VIX was coming up, what happens to Bitcoin? It goes down. When the VIX comes down, what happens to Bitcoin? It goes up. And you can see this just current action on the VIX. And looking from an inverted scale will probably be a little easier for you to understand. Most traders and investors react to price without a deeper understanding of what is actually happening underneath the surface. We don't do that here. We know what's going on. Instead of being reactive, we can be proactive, understanding and anticipating price moves before they occur. This is exactly what we've been doing. Knowing where prices could go at the start of the month and where they could end up at the end of the month is really quite important. These price paths are drawn through a structural awareness and understanding. They're drawn at the start of the month and then not changed. We saw US oil just peak out just slightly above its negative normalized price path. Now we're currently seeing US oil just flatline across the normalized negative price path this month. Inside the service video, I show all the continuations of these paths right up to the end of the month. It's very important that you know where things are going and where things can go as well. Remember, all the charts are intercorrelated and interconnected. When people understand the CTKS method, they don't look at surface price level action. They see the hidden architecture of price movement. And that architecture is playing into the Aussie dollar. This is particularly important to keep your eye on. The Aussie dollar did a bit of a cut over in yesterday's session. You can see it was forming a bit of a buy arc here. If we get continued upside momentum, we would anticipate the crypto market and the stock market to recover. That's how important it is to look at Forex, even if you're not doing Forex at all. To give you an understanding, this is a daily basis, or these are daily candles on the Aussie dollar. I'll just remove the price paths. Now, overlaying Bitcoin's directional price movement, we can see as Bitcoin was coming down, the Aussie dollar was also coming down. As the Aussie dollar started to flatten out, Bitcoin started to flatten out as well and come up. Notice what's happening right now. If we get a continuation in upward price momentum to the Aussie dollar, we anticipate the Bitcoin crypto rally to continue, and also for the stock market to turn around. This is timing. Most traders and investors either enter too early and suffer drawdowns, or enter too late and miss the moves. By looking at market structure, the CTKS method looks also at intercorrelation and interconnection between all the different charts so that you can time the market. It is wildly important in 2025 to be able to do this. Using Level 1 and Level 2 standard certification, you can learn how to draw up these price paths. They are very important to draw up. You can get an understanding as to where the structure is inside the market. If the price chart, in this case gold, can get above this structure, it means it's moving higher. And gold at the current time is following the normalized positive price path. This is also incredibly good for the crypto market. For example, when people are inside the service, they get the video that shows them where the price path is going at just at the start of the month towards the end of the month. Our anticipation is to look how structure would get interacted with and if price can hold that structure. This occurs, of course, under normalized price conditions. Intercorrelation and intermarket analysis is wildly important. The service members know that at this time, as the VIX was spiking up, this caused a decrease across silver and gold. Also, the stock market and Bitcoin and crypto. But if people weren't looking across the different charts, if they would just focus on the chart that they put money into, and what I call that is your money chart, they would miss the timing of the market. You can time the market, definitely. And you can time the market across a great many things. Across commodities, forex, crypto, just about everything. Yields, it doesn't matter. Learning the method is incredibly powerful, and you can see that you can get big surges up, but they retrace and normalize back to the paths. Structure and intercorrelation and interconnection control the markets. We know around the 20th of last month, the VIX absolutely went nuts and spiked. That created so much fear inside the main markets, and you saw in the introduction that the fear inside the main markets is so low at the current time. This is the ideal buying signal. It's not a sell signal, it's a buy signal. To be successful inside financial markets, it's very important to understand where price can go, if it's following structure and what structural path it's following. We can see for Microsoft is currently following the normalized negative price path. Looking at MicroStrategy on a daily basis, the key is to understand the CTKS method decodes market DNA, revealing the underlying structure that drives price action. So how can we see that? Is it correct? Well, let's just look at MicroStrategy's structural understanding, and here we can see just south of the 300 mark, around that 297, there was a negative CTKS gap and an absolute whack, a barrage of structural support between 236 and 242. We dropped down, found structural support, and whipsawed all over the place. This particular volatility was known ahead of time. And if you're an investor or a trader in MicroStrategy, you can take advantage of these gaps. If you're an investor, you want to accumulate where the institutions are accumulating. These are areas of high liquidity, and high liquidity is where you want to be. You want to move with the institutions and not against them. There's a video done inside the service that covers off the 3 price paths for every single chart inside the service. It's incredibly valuable to know where things can go, such as the US 2-year, the US 10-year, oil, you name it. It is important to understand. Many traders and investors rely on memorizing candlestick patterns to try to anticipate or figure out where price is going to next. Instead, you need a structured approach that works in all market conditions. Going beyond candlestick patterns is incredibly important because most traders and investors react to candlestick patterns without understanding the deeper reasons behind price movements. Instead, you need to decode the market's DNA. You need to reveal the underlying structure that drives price action. So why don't we do that? Let's just show what the underpinning structure of gold actually was. We saw up at 29.30 there was structural overhead resistance that couldn't be overcome. As soon as you get this is a structural rejection. A structural rejection immediately creates negative structural attraction to the level below, which was 29.03. And that structural failure was actually shown here on the next candle. That meant if you were in gold and you were seeking to go higher, you already had a candle that said, no, I'm not going that direction. So where did it go down to? You can see it got caught by the 29.03. But look at all of these higher lows, all getting printed. The sellers were in control. And why were they in control? That is all about intercorrelation and interdependence. We can see that we got a cut under and a structural failure at the 29.03, which created negative structural attraction to the 28.90 area. One thing to understand, these are not brick walls, these are gravitational areas. And as soon as we started to get cut overs, structural passes creating positive structural attraction to the next areas. We saw gold recover, but why did gold recover? You got it. Who was driving the bus of risk? Please let me know in the comments. Too many people just focus on surface level price action, never understanding the hidden architecture of price movement. Instead, you want an unfair advantage. You want to be able to predict market behavior instead of chasing it. As the VIX is currently in control of the market, please keep your eyes on the futures. The futures are wildly important to understand at this current time. We're starting to see positive follow through with the major market indices. This is good stuff and something that we would anticipate. The market is horrendously oversold. A very important line in the sand if you're trading or investing inside the crypto market is around that 86,000. This is particularly because of retail sentiment. If retail sees the price getting up to 86,000, they may anticipate this is just an underside retest of the 200 period moving average. They may anticipate negative downside reaction from there. Just remember, the VIX is spiking up. It's way above its normalized positive price path. We need to look at intercorrelation and interconnection between all the different charts. Keep your eyes on the price paths. They are incredibly important. Make sure you're looking just widely across the cheat sheet. Any weakness inside the markets you must pay attention to. Also, don't be swayed by the news. A lot of people will say the bottom is in. It's too early to tell. The bottom may be in, but the key is just keep on looking at intercorrelation and interconnection. Look at the cheat sheet components. The charts will tell you the truth. The news will tell you a story. And if you're making your buying and selling decisions based on the news or based on retail indicators, you're going to get slaughtered sooner or later. And I say this as a veteran who's been inside financial markets for nearly 4 decades. The longer you're inside financial markets, the more you realize you can't trust the news, but it's fun to read. And for the profiting students, it's a really good idea to look back into week 2 and make sure you understand all the cheat sheet components. Get to understand how to predict the tops and the bottoms, because all of these charts are intercorrelated and interconnected. They will move your money chart. Right now, the VIX is moving everything, but all the other charts are still wildly important. One thing that's particularly important, keep your eyes on the structural levels. When you understand how structure is moving and what is coming up, we saw that yesterday we had a lot of structure at the 79,501 mark. We had structural failures creating negative structural attraction down to the lower level. And then when we had a structural failure, that created this pushback to 77,043. This was a structural level, something that we could have anticipated. If we get a structural pass, we're moving to the next structural level. If we get a structural failure, we're coming back to the level below. You must know where the structure is. Now we know that the 86,000 is literally a retest of the 200 period moving average. Retail will be very interested in shorting at this level because it just goes through a continuity or recency bias. Now there are structural levels around the 86,000 and they're not light. So please bear in mind how structure can intercorrelate and interact around these levels. If we get a decay in the VIX and we get a push up in the Aussie dollar, I would suggest they're 2 very important signals that say we're going to come up and bypass the 86,000. If on the other hand we see the VIX start to spike up, this will put negative price momentum onto lower structural levels. Just remember, Bitcoin is not moving because Bitcoin is moving. It's moving because the cheat sheet charts are moving. When people understand this, this is quite a revelation. One thing to remember, don't just get caught up in retail sentiment. There are no bottoms, there are no tops. People say this is the bottom, people say this is the top. It's just a lot of rubbish. Price is always moving in a wave. Do not get caught into retail thinking. It will decimate your portfolio. All you need to be aware of is where the structure is, what charts are in control of risk off or risk on behavior. Bitcoin absolutely and utterly moved because of the VIX, full stop. Please let me know in the comments, where do you think Bitcoin is going to in the next 24 hours? Are you expecting a bearish case or are you expecting a bullish case? And to everybody who commented yesterday, you are so awesome. We have one of the best communities on YouTube. And if you haven't done so already, please make sure that you go to the cheat sheet and you grab it. This cheat sheet is wildly important. It will help you to master price action. It's incredibly valuable and it's absolutely free. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.